Welcome back. It's time to quickly take you through the key headlines from a mega exclusive interview with the finance minister. She said that 7% growth rate is not challenging and added that there was no slackness in the economy. She called on rating agencies to do their job after promising to stick to fiscal consolidation and urged them to take a comprehensive look at the economy. She also added that India needed better data to capture the jobs market, as several jobs were not being captured in current data. Sitharaman said that more work can be done on direct taxes when asked about the lack of relief to income taxpayers, but stopped short of saying if any relief will be provided in the next budget should the NDA return to power. On the issue of a possible rate cut, the finance minister said that the final call will be taken by the RBI and asserted that they would keep growth in mind while taking a decision. Let's listen into a slice of her conversation with Network 18's Rahul Joshi.
Yesterday in your budget speech, you were very appreciative of, income tax payers. In fact, the number of income tax, people paying income tax has gone up. Collections are up 2.4 times. You were quite appreciative. In fact, I thought you just stopped short of sort of giving them something back because, it was a vote on account. My question is that, salaried people are paying 30% today, whereas corporates pay 22% tax. In the longer term, directionally...
Corporates meaning as an entity,
yes,
company.
That's right. So I'm saying in the longer term, directionally, do you think you would align this in some way or the other? I'm talking about the longer term.
Well, the direct taxation reforms are a steady job in the pipeline, and some results come out and more work is happening. So direct taxation is something on which one ease of the taxpayers' facilitation which has to be improved, and also one of the things happened yesterday, one of the serving the customer better business in the taxation regime happened yesterday, but more work can always be done.
Yes, so salaried can be more hopeful in the coming days in your July budget.
I'm not saying anything now.
No, I know. When it comes to the markets, Nirmala Sitharaman can do no wrong. Last 2-3 years, markets have been on a roll. My question is, can you assure the markets and its participants that there will be stability in the capital gains tax regime? And I ask this question because last year you had tweaked, the debt market, the debt mutual funds in your budget speech. So, is there stability around the corner in the foreseeable future?
Policy stability is one thing which Prime Minister really lays a lot of emphasis on.
Yes.
He doesn't like periodic tweaking. He would tell you it's only 2 years, it's only 3 years, let it play out, let it settle down and so on. So he's never in favor of quick twists and turns. Right. And this is not me saying, people who have observed him for his tenure as Chief Minister will know that the biggest strength under Prime Minister Modi is stability in policy.
Okay, that is our exclusive interview, and we'll keep getting you excerpts of that conversation through the course of the day. But for now, we have run out of time on Power Breakfast today. Stay tuned, Bazaar Morning Call comes up next with all the action. Welcome back. You're still tuned into Power Breakfast. Well, the Paytm stock continues to remain under pressure on the back of RBI's crackdown on its banking business. CNBC TV 18 has now learned from sources that the regulator was forced to act after serious lapses in KYC norms that led to money laundering concerns. There are evidences of several related party transactions and false compliances. They were found to be submitted by the bank. Ritu Singh, she has been tracking the story very closely and is joining in with what she's picked up. Ritu, good morning.
Good morning, Sonal. From major irregularities in KYC processes, submission of false compliance reports and concerns about the group's commitment to transparency. Now, there have been some series of lapses by Paytm Payment Bank over the last 5 years, which culminated in RBI's stringent action against Paytm Payment Bank. Now, we've been given to understand from sources that within a year of the bank starting operations, RBI had already started to find instances of non-compliance, which ranged from breach of day-end balances in customer accounts to serious KYC violations. In the later part of 2021, for instance, RBI found some major KYC anti-money laundering violations by the bank, and despite regularly engaging with them, the bank could not address these deficiencies and they continue to persist. These irregularities in KYC that RBI found expose customers, depositors and wallet holders to some serious risk. They included the likes of absence of KYC for lakhs of customers, PAN validation failures in lakhs of accounts. Instances, there were examples of a single PAN card being linked to more than 1,000 customer accounts. The inspection also showed that the total value of transactions was often running into crores of rupees in some cases, which was far beyond the regulatory minimum, of KYC prepaid instruments, and that raised concerns about money laundering concerns as well. Now, we understand there was an unusually high number of dormant accounts which RBI found, which are prone to have been used as mule accounts. In fact, our sources said that roughly out of 35 crore wallets, about 31 crore were found to be inoperative. There were also concerns arising, from deficiencies in the KYC, which could have led to money laundering as well, lack of transaction monitoring as well. The second big concern was the fact that the bank did not maintain any arm's length distance in dealing with promoter group entities. Its financial and non-financial businesses were commingled with the promoter group companies, and that there was no operational segregation between the IT infrastructure of the bank and the promoter, and the compliances were also found to be false. So all of this put together led RBI to act the way it did.
Okay, all right. So those are some concerns that RBI had. Ritu, thank you so much for joining us. We'll keep coming back to you for more updates on this important story. For now, we'll slip into a break. When we come back, we'll get to excerpts from Network 18's exclusive conversation with Finance Minister Nirmala Sitharaman. Wall Street gains for the 13th week in the last 14, even as Fed Chairman Jerome Powell rules out rate cuts at the Fed's March meeting. Asian markets trade largely lower, while the gift Nifties indicated a muted start for the Indian market. 7% growth rate is not challenging. Finance Minister Nirmala Sitharaman, in an exclusive interview to Network 18, calls on rating agencies to do their job after promising to stick to fiscal consolidation. The Finance Minister is also hopeful of the government entirely utilizing the 11 lakh crore rupee capex outlay for FY25. State Bank of India's third quarter numbers miss estimates as deposit growth weakens in an operationally weak quarter. Tata Motors, on the other hand, delivers a strong beat on estimates as Jaguar Land Rover, the margin there expand. The company also raises margin guidance for the JLR business for the second consecutive quarter. In key earnings to track, Bharti Airtel will report third quarter numbers today. From the broader market, also watch for numbers from Tata Chemicals and Ashok Leyland. Sources say major irregularities, submission of false compliances and concerns over transparency are key reasons behind the RBI's crackdown on Paytm. Instances include absence of KYC for lakhs of customers and the use of a single PAN card for over 1,000 customers. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking this Monday morning. But there's a lot to talk about. So first up, as always, let's take a look at the Asian markets. They're largely lower actually today. So if we take a look at the rates, the Hang Seng is down 0.7%. We have the Taiwanese index, which is down 0.1%. It's the lunar week as well. So the new year, that is. And that is the reason why it will be a shorter week for most of the Asian markets in terms of trading. But most of them are lower. It's a mixed picture as far as the global markets are concerned. Let's take a look at the gift Nifty, because that one is indicating that the start for our own markets, it could be flat or mildly in the negative. It is indicating a 16-point downtick right now at that 21,935 mark, and it is fluctuating as well between those levels. So that is something we'll be watching out for. But let's talk about the US markets. Wall Street ended higher on Friday, with S&P notching a fresh record as quarterly earnings results from tech companies beat estimates and the January jobs report came in better than expected. Dow Jones added over 130 points, while the tech-heavy Nasdaq also gained 1.7%. Wall Street also saw fourth week of gains for the major benchmarks. Dow Jones rose 1.4%, S&P gained over 1.4%, and the Nasdaq also gained 1.1%. Shares of Meta jumped more than 20% after their quarterly earnings beat analyst expectations. The company also announced that they will pay a quarterly dividend for the first time. Amazon shares also gained over 7% on a fourth quarter earnings beat. On the jobs front, the US economy added over 350,000 jobs, beating the Dow Jones estimate of 185,000. CNBC's Rick Santelli brings us the highlights from the January jobs report.
First jobs report, jobs of 24 is out, and it is whopper 353,000. 353,000. We have to go in the Wayback Machine. That is the biggest non-farm payroll gains since January of 23, when it was 472,000. And if we look at the unemployment rate, it is 3.7. It's remained at 3.7. And just for history's sake, the 3.4 low that we had was the lowest since 1953. That was in April of last year. If we look at the average hourly earnings, a huge jump, up 0.6%, up 0.6%. It equals March of 22. To find a higher number, you have to go to January of 22. And also, for some context there, the amount of year over year is also popping 4.5%. We were expecting 4.1. The year over year average hourly earnings began as a data set in 2007, pre-COVID, all the way to when it started. The high was 3.6. It's 4.5. 4.5 is the highest level going back to February of 23. If we look at the average work week, 34.1, that is a drop. It's been at 34.3 or 34.4 going all the way back pretty much to beginning of last year. So that dropped 34.1. I don't even know if I have a record going back. That equals March of 2020.
Okay, all right. With that, we'll listen into some important opinion coming in from market experts on the January job sprint.
In 353 on the surface, of course, is a blockbuster number, but January is a very difficult month to seasonally adjust. There are a lot of seasonal layoffs. Unadjusted payrolls in January are always down a ton. So when you have relatively low layoffs, and we know that from the jobless claims numbers, from a bunch of other indicators, then you can get some very strong numbers. I would say a year ago, we had a very strong January jobs report as well, I think partly for similar reasons. Now, it is a very strong labor market. Labor market's doing great. The unemployment rate's 3.7%. It's been in that range for a long time, but I don't think it's quite as strong as the payroll number suggests.
Okay, all right. That's the global market action. But how will these overnight cues impact our own markets? We have our research team joining in to tell you what the trade setup looks like, the stocks that are likely to be in the news, and the action from the FNO space as well. Hey guys, a very good morning to all of you. Well, Hormaz, let me come across to you first up. What is the market setup looking like today?
The market setup looks slightly mixed right now. The last week was a good one and a not so good one as well. Now, I'll tell you what the good bit first. The good bit is that the Nifty Bank outperformed the Nifty on a weekly basis for the first time in almost 2 months. Now, the last week, the Nifty Bank was up around 2.5% compared to the 2.3% that the Nifty gained. And the last time that this happened was back in December of last year, the week that ended on December 8th, when the Nifty Bank had gained around 5.5% compared to the 3.5% gain in the Nifty. The other good bit was the Nifty made another record high on Friday, 22,126. Now that's where the good part ends. The not so good bit was after making that record high, the Nifty sold off sharply, and it both closed higher, but it ended almost 300 points off the highest point of the day. The Nifty Bank also, now even after outperforming last week, it is still the weaker among the two, because after making that intraday high of 46,892 on Friday, the Nifty Bank corrected almost 900 points from the day's high, and it closed below the 46,000 mark, which is this resistance band that has been there for the index. Now, even in the last 11 sessions, the Nifty Bank has closed above 46,000 only twice. Now, the Nifty also has closed at 21,850, exactly at that range where there has been a resistance band before before Reliance Industries took it higher. And speaking of Reliance Industries, the stock had its best week in almost 2 years last week, and it gained almost 8%, and it was the primary contributor to the Nifty up move, and it has posted a weekly loss only twice since November of 2023. There has been a significant contributor, and it's the other bit that has done well is the PSU index, and it's an event heavy week as well. The Park Hotels IPO opens today, Bharti Airtel, and a slew of other earnings as well. The handover from Wall Street has been good. The Asia is relatively lower this morning, and the GIFT Nifty is indicating a slightly mixed start to the trading day today. Back to you.
Okay, all right. Thank you, Hormaz, for that. But other stocks that will be on our radar. Upasana is joining us now. Hey, Upasana, good morning.
Hey, good morning. First up is SBI. The company's reported weak set of numbers. NI is up just about 5% on YoY basis, while PAT is down almost about 35% on YoY basis, while the asset quality of the company improves, GNPA at 2.4% versus 2.7% on quarter-on-quarter basis. Well, next up is Tata Motors. The company has reported a good set of numbers, big beat on earnings, revenue up almost 25% on YoY basis, while the operating margins stands at 13.9% versus 10.9%. While we are working with a poll of almost 12.9%. Next up is UPL. The company has reported losses much higher than expected, and the management expects Q4 to be weak as well. In terms of revenue, they are down about 28% on YoY basis, and margins are seen at 4.2% versus 22.2%. The company has reported loss versus profit seen last year. Next up is Aurobindo Pharma. The US FDA has inspected Unit 3 of your formulation manufacturing facility of Eugia Pharma Specialist, which is a wholly owned subsidiary situated in Telangana, from 22nd Jan to 2nd February 2024, and the inspection was closed with almost 9 observations. That's the reason the stock will remain in focus today. Next up is KPI Green. The company bags order for almost 15 megawatt from Ather Industries for executing solar power project. And next up is Cochin Shipyard. The company has been awarded a contract of 150 crores by Indian Navy for medium refits of 2 vessels. Next up is Paytm. Morgan Stanley Asia has bought almost about 50 lakh shares at 487 rupees. And lastly, Bajaj Finance will be in focus. The company has entered into a shareholders agreement to acquire almost 7% stake in RMBS Development Company.
Okay, all right. That is a long list of stocks, but a lot to talk about the F&O space as well. Mangnam is joining us now. Hey, Mangnam.
Good morning. So, on Friday, the Nifty ended mildly higher, the Nifty Bank in the red, but remember they hit record highs as well. So, from highs, we did see a bit of a decline on both the Nifty, and the Nifty Bank was down almost 1,000 points, and as a result of which we saw some weakness in the overall market. But, there was still some purchase in the cash market by both the DIIs as well as the FIIs. And if you just take a look at the index future space as well, the fact that we moved higher on the Nifty, FIs bought about 600 crores in index futures. They covered a few short positions, added some long positions as well. And as a result of which their long exposure is 33%, which as compared to last week's low was just about 22 odd percent. So at start of series, the FIs were net short to the tune of 1.1 lakh contracts. And now that's come down to around 75,000 contracts itself. Though there is resistance at the top, and that's something that we're witnessing with the Nifty 22,100 call being written pretty aggressively. 21,900 put, on the other hand, has been written as well. So what do these levels mean? That levels upwards of 22,100, most notably the record high of 22,126 that we hit on Friday would be a bit of a congestion, but at the lower level, 21,650 to 21,750 would be the support zone itself. For the Nifty Bank, however, it crossed both the 20 and the 50-day moving average on Friday, but thereafter it fell below that as well. So, the level that you're watching out for on the way up as a resistance is the 20-day moving average first, and at the lower level, you're looking at the 100-day moving average, 45,415. In terms of stocks, there are a lot to watch out for. Hindustan Copper has entered F&O ban among all the other stocks which are in the F&O ban. And then we have a lot of long positions added on oil marketing companies like HPCL and BPCL, and some shorts covered their positions on IOC. Let's see where they go.
Okay, all right. Thank you guys for joining us and prepping us up for this trading day ahead. We'll slip into a break. Up next, we'll focus on Paytm. The stock continues to remain under pressure on the back of RBI's crackdown on its banking business. More details on the other side.